Millions of Australian workers will receive more money in their bank account after the Fair Work Commission increased the minimum wage by 3%. The Commission's annual review decided on a rise of $21.60 a week, bringing the minimum wage to $740.80. Earlier, I spoke with Innex Willox, the Chief Executive of the Australian Industry Group. Innes, thanks so much for your time today. Firstly, can I get your reaction to this decision? You were lobbying for a 2% rise, so it's slightly more than what you'd hoped for.
Well, it falls into the category of it could have been a bit better, but it certainly could have been a lot worse. And we hope that the Commission has found the right balance here. We argued for 2%. The Commission's come in at 3%, $21.60 a week and over $1,000 a year added to the minimum wage, which is already the world's second highest minimum wage, behind Luxembourg, equal to France. So the Commission has pleasingly recognised that there are inflation and productivity issues that they needed to address, low inflation, which is something we'd argued for, and flatlining productivity, and something else that we'd argued in our submission. So we're very pleased that they've been recognised, but we shouldn't get away from the fact that these are still significant costs for business. It's above inflation, it's above CPI, and it will have an impact on businesses' ability to compete. But it's certainly not in the realms of the ACTU's 6% claim that they are after, and it's very pleasing that the Commission, after granting rises of 3.5 and 3.3 in the previous 2 years, has rejected that 6% claim from the ACTU out of hand and recognised that that would basically be a job killer. And I think the ACTU should put that campaign to bed now.
Yeah, well, it is something that they have been campaigning for almost going on years now, a 6% increase. The argument, as you say, is that that could backfire and lead to less people having jobs.
Well, absolutely, and that's always the risk in these decisions, because these wage determinations on the minimum wage do flow up and they do impact on workplaces and workforces more generally. So in some ways that becomes a new floor or a new standard that people seek. So we are seeing pockets of wage growth occurring within the economy. Construction's running at about 6% a year, for instance. Skilled jobs are running at much more than that. But there's only so much the economy can bear, there's only so much that employers can bear before they have to start making some hard decisions, and those hard decisions would be around workforce numbers. So we hope the Commission's got it right. It's less than it has been in the previous 2 years, but it is still impacts on Australia's competitiveness and the competitiveness of businesses within Australia to compete. So it's important that the Commission has sort of recognised the key issues that it did in making this determination, but a rise of more than this, that something like the ACTU was seeking, would have just been absolutely destructive. We just hope that employers are able to absorb this, or they'll just have to pass it on to consumers, and that's the decision that employers will have to make.
Yeah, well, I guess given that wages have been pretty stagnant of late, we've also seen house prices going down. We're expecting a rate cut possibly as soon as next week. Do you think that this might be the bit of a boost that the economy needs at the moment? Well,
the indicators are very clearly that our economy is going through a period of slow and low growth. We're not seeing sort of breakouts of growth. We're not seeing productivity rise substantially. We're seeing Australian businesses run into some quite strong headwinds locally. The decline in the residential construction market is having a big impact on businesses more generally. The drought is having a big impact on businesses. We're seeing the impact of global trade tensions slow down global demand. That's impacting on Australia. And when you think that 1 in 5 Australian jobs is export reliant, that has a significant impact on our economy and the ability of businesses to grow. So there's certainly no signs over the horizon that our economy is suddenly going to burst forwards into 3 or 4% growth. That's not at all on the horizon, and we foresee a period ahead, as sort of over the short to medium term, of this continued low and slow growth, with pockets of the economy, if not contracting, then certainly flatlining. And that's why this decision today was important, to try to get the balance right. And as I started out, it could have been better. We argued for 2%, which was pretty much in line with inflation. 3% compared to previous years isn't a bad number, so we won't sort of scream and shout about it too much. But it will have an impact on our competitiveness, and that's something that we just have to keep coming back to at a time when our economy is doing it a bit tougher than it has in the past few years. So we might look back and say late 2016, early 2017 were a high watermark, and since then we've been doing it tough. The key marker here for us is we have 5%, give or take a decimal point, 5% unemployment, and that should be the marker that we continue to aspire to hold. The best way to help our economy through this period is to keep people in work.
Yeah, but we don't want to see them with stagnant wages for years on end. So I guess you could say this is kind of a happy medium point between the 2% that you guys were asking for and the 6% that the ACTU was arguing for.
Yeah, I think you could argue that, and that's why we're not sort of saying it's the end of the world. It isn't, but it's sort of higher than we would have liked, but it's nowhere near what the ACTU was arguing, and the repudiation of that argument is probably the most pleasing thing out of this decision as far as employers are concerned. 3% is above inflation, so there is, in real terms, a wage increase here. Granted, it's not much, but in terms of real wages, they're not going backwards. What we've argued for quite some time is it's not a wages issue. I mean, we do have the world's second highest minimum wage. It's a cost of living issue in Australia, and around energy prices, health insurance, those sort of things. And they're the sort of issues that need to be addressed. We also say the best way ultimately of dealing with these sort of issues around equality, around helping people move up to aspire to more, is not through imposing burdens on employers in terms of additional costs. That's a road to nowhere. The way to deal with it is through our tax and transfer system, and that's why the tax cuts that the government has proposed and took to the last election was something that business and my organisation strongly supported, because of the sort of the economic growth benefit that they can potentially bring.
And do you expect there to be an impact on the delay to those tax cuts? I mean, the government said that Parliament isn't expected to sit until the first week of July. That tax cut will come, they're saying, but there might just be a slight delay to it.
Well, as long as they are introduced and passed, I see there's an argument now about whether they should all or partially be accepted. We would argue just pass the measures and let them flow through. There may be a delay, but if they're backdated, the impact will be quite minimal, we think. And it's a confidence booster. And we've seen since the election some signs of confidence in parts of the economy. I had a meeting with members yesterday who were quite representative of the economy as a whole, and their view was it's a little bit early to say if we've had sort of a big boost out of the election. Too early to say. But certainly things haven't gone backwards, and that's a positive thing. And the hope that tax cuts will be pushed through, I think, will be a significant benefit to the economy in terms of our sentiment more generally, and that's a positive thing. So we would just hope that they can be passed as soon as possible.
And what else do you think, looking at a bigger picture type scenario, what else can be done to try and help employees but also employers out there dealing with that increasing cost of living? Obviously, we don't really know what's happening with the energy policy. Would you like to see something a bit firmer on that coming from the coalition?
Well, very quickly, energy, we just need a clear pathway forward and some bipartisanship and certainty around it. This sort of Labor's got to get their position organised post the election. The government has taken a range of measures to the voters. We understand and accept that they'll press ahead with those, but we'd make the point that in and of themselves that's not going to be enough to drive down energy levels to the prices we expect. We're seeing, we think there needs to be a renewed focus on gas. Gas prices have crept right up and that impacts on electricity prices. So members of ours are now being offered prices of around $11.50 a gigajoule, which is again way up from historic levels and way above where they got down to. So we're seeing a gas price creep. That's impacting on businesses' ability to compete and invest in the long term. And separately, the election was notable for its whole lack of focus around the broader productivity agenda, particularly around skills, education, training, apprenticeships, vocational education. They're not going to be short-term fixes, but they need to be focuses now so that over the medium to longer term our economy can compete. And that all comes back to our productivity, flatline for a long time. The reality is, unless we get some productivity growth, we're not going to see the sustained and sustainable wages growth that everyone is calling out for. Quite simply, until we get that productivity growth, business won't be able to afford it. And the price, alternately, for imposing significant wage increases on business will be increased unemployment, and that's not an outcome that any of us want. So there are short-term problems. Energy is sort of at the forefront. Medium-term problems around skills that we can address now, and I haven't even got into the tax agenda. They're the sort of issues that governments, state and federal, need to look at.